amount of liquidity into the marketplace. I'm sure other governments around the world are doing this same type of thing, and when you also look at the many times record amount of cash in the balance sheets of a lot of these American companies, my question is, what is all of this liquidity going to do in the marketplace in the short run and in the long run, and is this the type of structural concerns that you were talking about a little bit earlier on?
Yeah, the reason I showed the chart of the monetary base is because in the public discussion about the quantitative easing type programs, they talk about what the Fed's buying, what it's adding to its balance sheet. And that's on the asset side, but on the liability side, what's adjusting to compensate is an increase in bank reserves. So what you should probably do is stay in touch with bankers, large and small, and find out what's lending looking like at your institution. So where it has been so far is overall lending hasn't picked up a whole lot. There's refinancings and things like that going on, but net lending hasn't picked up a lot. When that starts to happen, banks have the reserves that they can spin out into loans, and that's the point we need to watch, because then that monetary base starts to be spun out into the economy as an increase in the money supply. And that's the thing to watch with. So you need to stay in touch with the community bankers in the Raleigh area, stay in touch with the Wells Fargo guys, find out what's going on with their lending portfolios.
Well, I mean, in general, when we look at lending, and the reason why we have a lot of this cash withholdings is we don't understand some of the new regulatory environments that we're going to have to operate in. And we are still trying to get a grasp on the Basel Accords. We're still trying to get a grasp on the regulations from the Federal Reserve and some clarity around what constitutes liquid assets and how we can utilize and put money to work. So yes, we are out there lending. We are working actively in the communities to do that. But at a certain point, from a corporate balance sheet perspective, we have to be intelligent about it within the new framework of the regulatory environment that we're operating in. And that, I think, is true at the regional bank level, all the way up to some of the largest lenders and servicers in the country. It's, again, we as a population, as taxpayers, we're focused so much on the fiscal policy uncertainty, but there's a lot of monetary policy uncertainty from regulators that we're still waiting to get some clarity on as well.
Yeah, and that's in response. These are things we have to do because of the Dodd-Frank Act. And let me make a clarifying comment. The bankers I talk to, large and small, they want to lend. It's a question of finding qualified borrowers and finding those opportunities to lend. That's the issue. So there are a lot of businesses that don't want to borrow. Think about this comes back to the uncertainty, right? So they might have opportunities, and if they pursue those opportunities, they'd have to borrow funds probably to purchase capital equipment and the like. But until that uncertainty is resolved, they're not going to undertake that project. So there's no need for a loan. So lending doesn't pick up.
We have time for probably one more